Hello and welcome to our quarter in review for the January to March 2023 quarter, setting out some of the key updates and insights across global expat and employment taxes. I'm Stefanie Merlino, a partner in BDO's People Advisory Practice here in Melbourne.
Our first update for the quarter relates to the FBT electric car exemption that received royal assent back in December. The ATO has recently issued a fact sheet on the exemption, which provides further guidance to assist employers in determining their FBT obligations when providing an employee with an electric vehicle and other associated items for private use. Of specific mention, the exemption will not apply where luxury car tax has become payable at any stage. Hence, where an electric vehicle is second-hand, you will need to look at the sale price of the electric vehicle every time it has been sold to see if any LCT was payable. In the absence of a sales history, the ATO has suggested this being conducted by way of an internet search, car report, or an independent valuation. The ATO has also clarified in the fact sheet that the purchase of an electric vehicle charging station is not a car expense and therefore does not qualify for the FBT exemption. Instead, a property fringe benefit will arise where an employer gives the employee the charging station, or an expense payment fringe benefit where an employee is reimbursed for the cost of purchase and installation. It is not uncommon for the home charging stations to be incorporated into an employee's lease arrangement. Where this occurs, the value attributable to the charging station will need to be separately identified to ensure the resulting FBT liability on the benefit is captured. With respect to home electricity costs incurred by an employee when charging their electric vehicle at residential premises, the ATO has recognised the compliance challenges for employers given electricity usage for charging the electric vehicle is combined with the total electrical consumption of the household. As such, the ATO issued their draft Practical Compliance Guideline PCG 2023 D1 on the 31st of March 2023 to assist employers with the methodology to calculate the cost of electricity. The applicable EV home charging rate is stipulated as 4.20 cents per kilometre. If this methodology is used, any charging costs incurred at a commercial charging station must be disregarded. It is important to note the draft PCG does not apply to a plug-in hybrid vehicle. This has been issued for consultation purposes only, with comments to be made by the 26th of May 2023. Our second update relates to payroll tax and the public ruling issued by the Queensland Revenue Office in December regarding the application of the relevant contract provisions to medical centres and other similar healthcare providers. The ruling follows two recent tribunal decisions, Optical Superstores in Victoria and Thomas & Nas in New South Wales. The taxpayer in Thomas & Nas had appealed the tribunal's decision. However, the New South Wales Court of Appeal handed down its decision on the 14th of March, dismissing the taxpayer's appeal and affirming the existence of relevant contracts. In summary, Queensland's public ruling sets out that payroll tax obligations are likely to arise for Queensland medical centres and other healthcare providers if amounts are paid under a relevant contract with a practitioner. A relevant contract will arise where there is a provision of services between the parties. This may include where a medical practice has operational control over a practitioner, which includes having influence over who practices at the centre, the hours or days of practice and the space within the clinic. Also where the practice provides administrative services to the practitioner, which includes arranging appointments, billing patients including bulk billing through Medicare, and maintaining patient records. An amnesty was announced in February which may apply to contractor general practitioners who are registered with the Medical Board of Australia. To qualify for the amnesty, a medical practice must complete an expression of interest form and, if successful, will be exempt from payroll tax obligations until 30 June 2025. Further information has been issued by Queensland Government in relation to the amnesty with two separate guidelines. One, an administrative guideline, and a second Commissioner guideline which outlines certain operational aspects of the amnesty. Queensland Government has extended the cut-off date for expressions of interest. This is now 29 September 2023 instead of 30 June 2023. For medical centres and other healthcare providers operating outside of Queensland, we recommend you consider Queensland's ruling together with the recent guidelines. given harmonisation of payroll tax across the various jurisdictions, in the absence of further guidance being issued by other states or territories, we recommend you consider your obligations in line with treatment in Queensland. Moving on to contractors, an area that continues to attract significant attention by the regulators. The ATO issued a draft ruling and draft PCG in December of last year, TR 2022 D3, which is an income tax ruling and considers who is an employee for pay-as-you-go withholding purposes, together with PCG 2022 D5, which sets out the ATO's compliance approach when classifying a worker as an employee or an independent contractor. The draft ruling and draft PCG are for consultation purposes only, with submissions having closed on the 17th of February 2023. The draft ruling replaces TR 2005-16 and takes into account recent High Court decisions, personnel contracting and JAMSEC. The draft PCG provides practical guidance for organisations to consider, providing a risk framework when entering into contracting arrangements. The ATO is currently reviewing a number of other rulings in relation to the ever-important distinction of employee versus contractor, including SGR 2005-1, which sets out who is an employee for superannuation guarantee purposes. The ATO has indicated an expected completion of this review in late 2023. In the meantime, we encourage all organisations to review their current procurement and other processes when engaging with contractors, noting there is renewed guidance and refreshed views of the ATO in this space, with more to come. One final update for the quarter is another payroll tax update, this one in relation to the employment agency provisions. Employment agency arrangements continue to be a matter of scrutiny across the various jurisdictions, and we have seen another decision coming out of New South Wales in the case of Infinity Security Group against the Chief Commissioner of State Revenue. In this case, the tribunal has found in favour of the taxpayer and confirmed that security guards provided by the taxpayer to pubs and clubs were not integrated into the client's business and therefore were not providing services in or for the conduct of those businesses. Hence, the employment agency provisions did not apply. For organisations who engage services through an intermediary, the key test to consider is how integrated the service provider is in the client's business and whether they are providing services in and for the conduct of the client's business. Where they are, the employment agency provisions will likely have application, leading to a payroll tax obligation. Unlike the relevant contract provisions, which contain certain exemptions designed to carve out genuine independent contracting arrangements, the impact of the employment agency provisions applying is that there are no similar exclusions to consider. That wraps up my update for the quarter. Please reach out should you wish to discuss any of the updates shared today or any other global expat or employment tax matters. Thank you and goodbye for now.